This is the 2014 ordinary level question for interpretation of accounts. So we'll correct the 2014 one first. It's Robinson Limited. This again is our trading profit and loss, and this is our balance sheet. What we're required to do, the first one is the figure for closing stock. Nice and easy. Closing stock is here. They're showing question marks. Well, we're given the cost of goods available for sale, and we're given the cost of sales, and we know that this figure here minus closing stock is 336, so 358 minus 336 is equal to closing stock, which is 22,000. So 22,000 I should have written in the workings 358,000 minus 336,000. Next one, gross profit, same again. Credit sales minus cost of sales is equal to gross profit, the difference being 174,000. Rate of stock turnover. So the formula for the rate of stock turnover is cost of sales over average stock equals times. It's the times that we turn our stock over in the year. How many times we have to buy new stock because we sold all our previous stock. Cost of sales given 336,000. Average stock, we don't know it. You nearly always are given this this question to do this specific ratio, and you always have to work out the average stock. That's the formula for average stock. It's opening stock plus closing stock, which we worked out here, divided by 2. So opening stock was 98,000, closing stock we worked out to be 22,000. Divide that by 2 and you get 60,000. That's now my average stock, this guy here. So 336 divided by 60,000 is now going to be my answer, and that works out at 5.6 times. I will draw your attention to like the times here, euro. So the unit symbol is very, very important. 40 marks going for 5. There's 8 marks going for each one. If you do not have the symbol, the units showing what it kind of means, then generally you'd lose about 2 marks. So you throw away 6% for, you throw away 10% if there are 2 marks each, just from not putting in that euro symbol or the time symbol or whatnot. Important to have it in. Period of credit received from trade creditors. Formula: creditors divided by credit purchases, and again, this one here, we're looking at either days or months, and they don't give an indication, so they don't tell us the period in months of credit received from trade creditors. Period of credit received from trade creditors is how long do our creditors give us before we pay them back. So how long generally does it take? My creditors is 36,000. My credit purchases up here given again 260,000. I'm going to multiply by 365 because I'll get the days amount, and then I'll know accurately, okay, it's however many days. If they tell you to get months, then you multiply by 12. So my formula, as I said, 36,000 my creditors divided by 260,000. Creditors divided by credit purchases up here, and multiply by 365 is 50.54. It's 2 decimal places. 50.54 days. Days is quite important. Asset test ratio is the last one here. My asset test ratio is my current assets minus my closing stock is to my current liabilities. How do my current assets minus closing stock relate to my current liabilities? So my current assets given at 63,000. My trade liabilities, or my first of all closing stock. My closing stock here is working out. We worked it out at the start to be 22,000. So I know 63 minus 22,000 is to my current liabilities, which is only trade creditors, which is 36. So 63,000 minus 22,000 closing stock we worked out is to 36,000, and that's 41,000 is to 36,000. Again, the ratio is important here. How do I get 1.14 is to 1? And you need to work it down to the simplest format, which is always the second figure is to 1. So if this was 18,000, for example, it would be half of this. So it would be 0.5 is to 1. I just divide the 18,000 by 36,000, I get 0.5, and then I'd have 1. If this was 36,000 and this was 36,000, it'd be 1 is to 1. If this was 72,000 and this was 36,000, it'd be 2 is to 1. So it's basically, what's this in relation to this? 41,000 divided by 36,000 is 1.14, and then obviously 36,000 divided by 36,000 is 1. So divide by the second one. That's 2014. 2017, okay, first one they're asking us is for opening stock. Again, this figure here, how do I get it? Well, I can't do anything with my sales to work it out, but I do know that this figure plus this figure is this one, minus closing stock is this guy. So to reverse this, if I add closing stock and minus purchases, I'll get my opening stock, because I'm going to do it in reverse. And that works out to be 24,000. So again, to work back, I'm going to add closing stock instead of take it away, and then I'm going to take away credit purchases as I'm trying to work back to get my opening stock. The rate of stock turnover, we've seen this in every question, so I decided to copy and paste from the exam paper. We have to start by cost of sales divided by average stock. I don't have my average stock, so this is my average stock formula. Opening stock plus closing stock divided by 2. Opening stock is 24,000, closing stock is 16,000, and I divide that by 2, and I get 20,000. So that's my average stock worked out. My formula again for this is cost of sales divided by average stock. That's my formula for rate of stock turnover. My cost of sales is given at 368,000. So 368,000 divided by 20,000, and my answer is in times. My answer is 18.4 times. Again, rate of stock turnover, this is your formula. We don't have average stock, so I'm just doing the average stock here first. I worked out the average stock, 20,000, and I'm just putting it under the cost of sales. You'll see that quite often in ratios, even at higher level. So that's that one. Next one I'm going to go back to now is return on capital employed. So third one we're asked for, the return on capital employed. So the formula for return on capital employed is net profit before interest divided by capital employed multiplied by 100 over 1. Net profit before interest. If I was to bring you up here and I was to tell you that my credit sales is 675, my cost of sales is 368, my gross profit is 307. What's my gross profit before cost of sales? Well, I just take away the cost of sales transaction which I've done. As in, my gross profit before I accounted for cost of sales is to add the two of these together, because my gross profit after cost of sales is the figure I get after I take away cost of sales. Basically, same point, I suppose same point for this one here. My net profit is 171,000. To get to that point, I had to take away interest, and the interest was 8,000. So to get my net profit, I've already taken out the interest. But if I want my net profit before I took out the interest, I just add it back. So 171,000 plus 8,000 is my net profit before interest. What's my capital employed? It's the last figure here given in a balance sheet. It's the balancing figure. That's your capital employed. So 171,000 plus 8,000 divided by 991,000. So 171,000 plus 8,000 divided by 991,000 multiplied by 100 over 1 is 18.06. Again, to 2 decimal places, and it's a percent. Very important. Do not forget the units. That's a percent. The last one I have here is my period of credit received from creditors. The formula, again, we've seen this one is creditors divided by credit purchases. We are not given an indication of whether it's in days or months, so we always go for days. So to get days, you multiply it by 365. Please don't multiply by both of them. 365 is for days, 12 is for months. So to work that out, I have my creditors, just given in the question, to be 53,000. My credit purchases, which is up here, 360, multiplied by 365 over 1 is 50.74 days. 2015. So last one here, gross profit margin is my first one. So my gross profit margin is my gross profit gross profit divided by sales multiplied by 100 over 1. So my gross profit in this one here is what? I have to work it out. So I have to work out my gross profit. It's 640,000 minus 380,000. Because 640,000 minus 380,000 is my sales minus cost of sales, and it gives me my gross profit, 260,000. Therefore, 260,000 divided by 640,000, my gross profit, divided by my sales, multiplied by 100 over 1 gets me my gross profit margin. So, 260,000 as I just worked out, divided by 640,000, which is sales, multiplied by 100 over 1, to 2 decimal places again because they told us to do that down here, and it's always in percent, 40.63%. Again, I've just copied in from the marking scheme the rate of stock turnover. My rate of stock turnover, how do I get it? Well, my formula for it is here. It's cost of sales divided by average stock. Cost of sales I'm given to be 380,000. So that's my cost of sales. But I don't know what my average stock is yet, because it's not something you're ever given in the question. But I do know it's opening stock plus closing stock divided by 2. My opening stock is 28,000 and my closing stock is 16,000. So if I divide that by 2, I get 22,000. So this is my average stock figure. I'm just putting that in from this formula here. 380,000 divided by 22,000 in times is 17.27 times, again, to 2 decimal places. That's my second one. Third one I have here, again, we see the return on capital employed. So that's, again, my net profit before interest divided by capital employed multiplied by 100 over 1. Net profit, 148,000. Interest was 7,200. Therefore, my net profit before I took away my interest is 148,000 plus 7,200. My capital employed, I'm given in the question, always in the balance sheet, it's the balancing figure, 948,000. I multiply that by 100 over 1, and my answer is in percent. My answer is 16.37%. It's my return on capital employed for the 2015 question. Last one, shares left to issue. It's not a formula, but I was hoping you'd spot it. How much shares does this company have? We've seen before and published about shares in published accounts. So they've authorized shares of 800,000. That means the company is allowed to sell 800,000 shares. They're allowed to sell the worth of their business up to 800,000 shares. That might be 20% of their business that they're allowed to sell off. How much of them have they issued? They're allowed to issue 800,000. They're authorized to do so. But they've only issued 720,000. If you're allowed to sell 800,000 of something, and you've only sold 720,000 of it, how much of it is left? Quite simply, my shares left to issue is your authorized shares minus your issued shares. 800,000 minus 720,000 is 80,000 shares left to issue.